Assalamualaikum, I'm Shakeel Adli. I'm the founder and CEO of Zunikh, which is a ethical values-led development company operating in the UK. I was formerly an equity partner and the global head of Islamic finance at CMS Cameron McKenna Nabar Olsheim, which is a large international law firm.
Critics argue Islamic finance often mimics conventional debt in form, not substance. As someone with deep experience in structuring, how do you respond to this perception?
I think there is a genuine perception that Islamic finance could improve in terms of how people determine it to be Sharia compliant. I think sometimes that criticism is slightly harsh on the basis that we need to understand what Islamic finance is in the first place and what its purpose is and actually where we are as an Islamic finance industry in 2025. So just to build on that, the simplest way in my view to understand Islamic finance is to appreciate there's a horizontal niche. And what I mean by that is what you have in conventional finance, almost everything can be done in a Sharia compliant manner, and there's three main baskets. There's either debt, which is essentially lending, there's debt capital markets, which is bonds or sukuk, and then there's insurance. Each one of those products has different components, and how they're assessed from a Sharia perspective also varies. Something that a lot of people unfortunately aren't aware of the nuances of Islamic finance. But for example, AOFI, which is the main standard setting body for Islamic finance globally, has 62 Sharia standards. Sharia standard 62 is in the process of being launched. So there are a lot of standards around how something is determined to be Sharia compliant, and a huge amount of thought has gone into each one of those individual standards to say what it is about that particular product that makes it Sharia compliant. And if you go into AOFI's website, you can download the standards and you download the rationale for each of those standards and why they're there. So I think sometimes it is harsh, the criticism that it's more form rather than substance. The other really important point is to bear in mind that Islamic finance in its current iteration has only been around since probably about the mid-1970s. So we're not talking about a huge amount of time, and we're talking about an industry that sits on conventional finance. Because there was prior to that kind of 1975 there was no real Islamic finance. So you're coming into an environment where conventional finance has been around probably since about the 1400s with the papacy. So actually you've got a huge head start with conventional finance, and Islamic finance is being sat on that. So yes, I do think sometimes the criticism is harsh. It may not be ill-intentioned, but I think sometimes it misses the nuances of where we currently are.
How do you ensure Sharia governance is genuinely independent and not just a box-ticking exercise, especially with institutions and investors involved?
I think we as Zunikh are somewhat unusual as a founder and CEO, I specialised in Islamic finance for most of my professional career. Similarly, my colleague Sean Goff was an associate in the Islamic finance team at CMS. So we understand when we look to structure something, the parameters around Sharia compliance. We then work with an advisory firm that will confirm compliance with the structure that we put in place and the documentation we put in place. So I think it is really important to ensure that the structures are there that provide certainty to investors that a product is Sharia compliant. What's really important is that when you have a scholar or an advisory firm providing that guidance, that they're given full transparency of all of the documents they're entered into. Oftentimes, when a Sharia scholar issues a fatwa or a jurisprudential ruling, they're ruling on documents. So if they, for example, have not seen a side letter or an additional document, they're not going to be able to confirm that's compliant. So it's really important to understand, is that everything? Has the scholar or the advisory firm seen all the relevant documentation, and therefore is that a Sharia compliant document? It is important though that any consumer also carries out their own research to verify that actually what they're being told is correct.
Right.
So I always analogize it in English law. You have the concept of constructive knowledge. So if you're aware that something may be amiss, even though someone else is telling you that it's okay, the duty is still upon you to substantiate what you understand. So a scholar can do it, but you, to the extent that you can, should try to consider whether there's anything that's been missed, or you ask pertinent questions.
Do you think Islamic finance has lost its disruptive potential by conforming to the global financial system? And what would real reform look like?
No, I don't think Islamic finance has lost its disruptive potential. In particular, again, going back to the point about the bedrock on which Islamic finance currently sits, Islamic finance is naturally disruptive on the basis that it's an entirely different way of operating. And one has to understand the purpose of Islamic finance. And so Islamic finance is there to provide a system of finance which is more ethical, is fairer to all involved, encourages genuine risk sharing, and removes a lot of the negatives that are associated with conventional finance. Now, I think if you were to ask most people what they think of payday lenders, most people would say payday lenders are not good because they're exploitative. Now, payday lending is something that would never exist in Islamic finance because it's not fair. You're not treating the consumer necessarily in a fair manner, and it is exploitative, and Islamic finance won't allow that exploitation. So I think there is the ability to continue to be disruptive, and Islamic finance, by virtue of being different, is already disruptive. The question is, how do you extend that disruption in a positive sense? So you have lots of, particularly in the UK, as a market leader in the Western world, you have a lot of fintechs, for example, they are being disruptive. So in each of their own individual ways, they are changing the financial offering that exists for consumers, whether Muslim or not.
Why are institutional investors really seeking Sharia compliant real estate? Is this for values, diversification, or just compliance?
I think it's all of those, but probably the one that I would add on top is financial return. And I think for institutions who have shareholders, they need to deliver levels of return that their shareholders expect. And if you work backwards from that, that's going to affect the type of product that you put forward, the returns that you put forward will affect the type of product that you then create, and naturally the risk weighting as well. So if it's a pension fund, for example, the pension fund will want low risk but certainty of income. So you would tailor your product accordingly. Institutions fundamentally, yes, they do want diversification because it's naturally a hedge against risk. They do want the right level of profit return, and they do have an alignment of values, but it's an individual institution question as to what they place weighting on. Because in my own experience, I know, for example, Sharia compliant investors who wouldn't invest in anything unless it's delivering a certain return, irrespective of whether it's compliant or not. And I think that's really important, that if institutions, particularly those where there is an Islamic purpose, there has to be a level of return is sufficient to ensure that the wealth that's being generated is actually increasing on a daily basis. And I think just a little adjunct, if I may. If you are someone who wants to invest in a Sharia compliant manner in the UK, generally speaking, you're going to have to be hitting at least 6% per annum in order to stay still. Because inflation in the UK is currently 3.6% or 3.5%, sorry, and you pay zakat of 2.5%. So unless you're hitting 6%, your money's actually depreciating in value.
Right.
So receiving a product at 4% means you're actually you're losing 2%. That's certainly not the prophetic tradition. So we have to have products that deliver returns for both Muslims and non-Muslims that essentially outperform the conventional market so that the Islamic finance industry can grow.
How do you approach ethical investment in emerging sectors like sport, wellness, or ESG-linked real estate while staying true to Islamic principles?
When you're looking at any investment strategy or product, you need to have an understanding of what is it that you want to attain. So if you're looking to do something for altruistic purposes, you may be flexible in terms of return. But when you look at different sectors, again, what's your purpose for that investment? Is it purely income generating? Are you investing, for example, in a football club because you simply want to have a brand name and you want to get a return? Or are you doing it because you want to be impactful? So there's Forest Green Rovers, for example, which is a significant outlier, but a really good example of how you can embed climate change and ESG into a football club. And that's not something that's very well understood, but it's something that can be done. So I think if we look to invest outside of our own business, then it would always be driven by purpose. What will that investment achieve, and not purely for numerical return.
Is the current state of Sharia compliance model fit for purpose, or does it need modernization to reflect both investor expectations and ethical intent?
I think the Sharia compliant model is most definitely fit for purpose, not least because there are 62 standards that AOFI alone have issued governing Sharia compliance. And those are just the Sharia standards. They've got accounting standards, they've got governance standards. So there's lots of standards out there that mean that how a individual transaction is deemed to be compliant is verified and verifiable. So it's not a question of are there processes in place that allow for true Sharia analysis to be carried out. It's more whether the parties that are involved in transactions understand them and actually give scholars all of the information they need to be able to make that determination. Because I'm a qualified solicitor. If I was to sit down with you and say, okay, well, you're looking to document a contract and we go through it and it's got 100 points and you disclose 99 points to me, that's great. But actually that one point that you've not disclosed may change the entire analysis of that product. Similarly, if you're looking to do something in a Sharia compliant manner, if the scholars don't have all of the information and they've got 99% but not that missing 1%, that may change their analysis. This is not a fixed process. This is a process involving human reasoning. And so scholars have to determine whether something is or is not compliant based on their knowledge and based on an understanding of how you would apply the Sharia to that factual circumstance, because different circumstances result in different outcomes. So lay people may think, why is it the case that this is acceptable and this isn't acceptable, but not understand the difference? I'll give a bit of a tangential example. If you go into a shop, you could see two items, both exactly the same, but both priced differently. Why? Because if you go in, one item may have been on the shelf for 6 months and the other item may have been on the shelf for a month. So the 6-month item has been there for too long, so they want to sell it. So they'll reduce the price of that, whereas the 1-month item, they won't necessarily reduce the price. And again, if you understand that, you need to be clear when you speak to scholars and you speak to advisors, the actual product that you want to create and all of the documentation associated with it. But I don't think there's any issues with the governance framework. I think there are obviously always improvements that can be made, but it's more around what is disclosed to scholars in them determining their decision.
How do you see Zunikh shaping the future of Islamic institutional capital? Is it a proof of concept for a new generation of impact-led values that are based on development?
We would most definitely hope that others follow the example that we're setting in delivering a purpose-led business that accords with Sharia principles and more generally ethical principles, delivers outperforming returns for investors, but all whilst being very conscious of the need to do good. We would absolutely love that. We would absolutely love others to come along and donate 50% of profits to charity. That would be amazing. I think that all we can do is provide an offering to institutions and non-institutions which demonstrates a level of return that they are not seeing. And actually, to be very clear, the returns that we offer that doesn't mean that the investors need to donate 50% of profits to charity. We as Zunikh donate 50%. What investors choose to do with their wealth is their discretion. But what we're trying to do is set an example where you can be a very profitable business and still donate charitably and do good and be socially impactful. But it's something that for institutions in particular, we want to provide an alternative offering. And I think where we are particularly unique is that there are not very many developers who are principals who are providing investment options. There are, of course, platforms through which you can invest, but those platforms are not the principals involved. So you won't have platforms building houses or building student accommodation or building retail industrial. That's what we do. So we are providing as a principal an investment opportunity for sites that we have control over and delivering exceptional returns. And we would hope that institutions understand that and that model is then replicated by others. We would love for others to follow exactly what we're doing, because the more good that can be done through real estate, the better for everyone, communities, the environment, etc. And it's really important that it has to be something that is genuine. It's not lip service. It's something that people are prepared to, as a business, we're prepared to take a financial sacrifice on our own return, not investors' return, on our own return, to do good.
Zunikh's model returns 50% of its profits to the community. Is this your answer to the limited social impact of traditional Islamic finance?
If you look at the purpose of Islamic finance is there to provide an alternative economic system, empirically better for wider society, because it helps with removing financial barriers, it's fair, it encourages a greater return, encourages greater risk sharing, etc. So I think the social impact has always been there as part of Islamic finance. The question is, what are those Islamic finance products being used for? And so I think sometimes the impact of those products can be more limited. So for example, microfinance, there's not a huge amount of Sharia compliant microfinance, but that would be incredibly impactful if there was more. So I think for us as a business, we're trying to set an example where you can be very profitable, you can give very strong returns to investors while still affecting positive change. And to give you a simple example, through our endeavours, we support local charities. But we don't only support those local charities through donations, we support them, for example, with their real estate needs. So we will provide pro bono services to charities to help them find new premises or refurbish or whatever it may be, refurbish existing premises. And we're not looking to make money. And we would absolutely love for others to do the same. So what we're talking about here is Islamic finance doesn't have a social impact. The question is what products are being launched and how are those products improving on that. But the purpose of Islamic finance is to be socially impactful.
Are Sharia boards and investors truly aligned on long-term impact, or is there a gap between what's approved and what Islamic finance is meant to achieve?
What a Sharia scholar approves will be the documentation that's put in front of them, and then there will be an oversight of that on an annual basis through a Sharia audit process to make sure that the product that's been approved is the product that's implemented. Sharia scholars are not there to determine commercial outcomes. They're there to determine whether something is or is not Sharia compliant. So if you're looking at drivers of change, it's got to be the principles behind that product that need to say how they want to be impactful and what they want to see. So the role of the scholar is to certify and then verify on an ongoing basis, but it has to be those who've put forward the product, who've created the product, that have to be in control of how they generate those returns.